Hello, everybody. Welcome back to another Market Open. It is May 22nd, 2023, and we are here. It is a beautiful Monday morning on planet Earth, wherever you are in the world, I'm sure. Hopefully that it's beautiful. It was a little rainy here over the weekend, but now in New Jersey, it is a nice little sunny day. Went out for a little walk this morning. It was very nice. Everclear, what's up? Seth Roth, Roy Dominic, Philip Rizzo, Mr. Riz, Mark LeBlanc. Yo, dirty Canadian stock markets are closed today. May have to watch Palantir today. Just got to watch that Palantir price action. Felicia, Joseph, Aha, Ty Gorton, Joseph, Paul. Hello, everybody. We are here for another Market Open. Now, a lot of things going on that are affecting us in a political landscape, primarily, which is having economic implications. There are two major things to think about and to kind of be on the top of your mind as you go throughout your day. Number one is the Republicans and the Democrats in the United States are trying to negotiate an increase in the debt ceiling. We are $30 trillion under debt. We are trying to increase that debt ceiling to $31.5 trillion. So $1.5 trillion of debt ceiling increases. The Democrats are saying that we need to spend on certain programs and they want to have a further increase in the debt. And the Republicans are basically saying that we are basically going into bankruptcy if we keep incurring this debt and never care about spending. And so each side has their own unique nuances to things they want to get out of the deal. I personally believe it's just political showcasing and we're going to get a deal done. However, both sides are still holding out before they sign on the dotted line. President Joe Biden has said that the 14th Amendment might give him constitutional authority to be able to essentially do whatever he wants through executive power and raise the debt ceiling, because he said that if he does not take that authority under his hands, it could have massive economic implications. People have said that the S&P 500 could fall to $1,800, which is a 45% decrease from where it is right now at around 415, if we don't negotiate a deal. So this is, the political implications of this are massive. The question is going to be, if the Republicans and Democrats come to a deal, there's going to be a deal. It's not like there's not going to be a deal. We've raised the debt ceiling hundreds of times. This is just part of the political theater that I think each side is showing up. But some of the politicians that are playing this game definitely are playing it because they want to showcase that we do need to do something about our debt problems. And we have really historically never done anything about our debt problems, which is why we're in the current place we're at right now. And that if we were to do something, then maybe this would usher a new era in terms of how the United States thinks of spending. But then you've got a whole other side of the country that doesn't really care about spending. And so that's going to be really interesting to see kind of what happens from there. Adele, good morning. Iceman, JJ, Dan Harkness, first time live. Dan, how'd you find the channel? I'd be curious to know, but thank you for showing up live for the first time. Hope it's valuable to you and you show up more in the morning. Republicans are basically saying the president is a Democrat, so we are not signing. We already did our insider trading. Well, here's the thing. The Republicans and the Democrats both have a crap ton of money in the stock market. And the stock market hates instability because the stock market needs to know what the hell is going on. And so I think we're going to get a deal. It's obvious. The question is, under what circumstances will they both look good? It's kind of like Putin with this Ukraine stuff. He's not going to leave until he thinks he looks good. And until one side thinks they look good, then there's not going to be any real negotiation that officially goes through. We've got Tesla at 180 pre-market. This is a stock that was stuck at 162. In fact, let me tweet that, because I haven't tweeted about Tesla in a long time. Tesla 180 pre-market after being stuck at 162-ish for weeks. Now, it's interesting because Tesla's Investor Day gave investors a lot of confidence, or their shareholder day, whatever it was. And, it's the Twitter CEO. A lot of things have happened since their last earnings where margins were decreasing. In fact, the advent of potential advertising has been introduced into the strategy. So a lot of Tesla shareholders probably feel a little bit more, optimism that Tesla stock will be able to go up. Is this sustainable? I don't know. We're going to see. Tesla is now trading at a $570 billion market cap. Remember, it was at like 240 a couple months ago. So it's not like it's totally out of the question that it is in for a rally, but I think it would depend on if the entire market rallies in order to take Tesla up with it, just given how big Tesla is as a company. Palantir is at 1170, Truist Financial 2997 pre-market, Apple 173 pre-market, Meta 244. Now, Facebook just got hit with a $1.3 billion fine over data transfers to the United States. I'm still reading this article by the Wall Street Journal, but looks like they're going to have to cough up 1.3 billion if the EU court has what it wants to be able to do. And if that's the case, that's a lot of money. Like that's a small traffic fine for Facebook, but $1.3 billion is a decent amount of money that they're going to have to be able to pay. Myra, good morning. Fernando, good morning. And so we're going to see how that affects Facebook. I think that's why the stock's down a little bit. I mean, if they have to give up 1 billion, you know, it's not going to hurt them, but it's definitely not going to be nice on their earnings, knowing that $1 billion could have went into EPS and instead it went to the USFG. NASDAQ, 12,657. We've got Robinhood at 857, Open Door 240, Amazon 116, Spotify 149, AMD 105. AMD has gone up very nice. I mean, it was at 67 about 6 months back or something. So AMD has gone up really, really well. What was the other stock I wanted to see? Yes, let's go to Shopify. Shopify is at $60 as well. Kathy Wood has been selling a decent amount of this. Let's check out ARK and how ARK is doing. ARK is at 38.70. Now, the other really important piece of news that we have to go over today is that the Fed's James Bullard, who is the chief executive officer of the Fed, said that he anticipates there will be 2 more rate hikes before this year ends, and that recession claims are a little bit overstated. So he's being a little bit bearish on like the idea that a recession is going to be that massive, but he's not that bullish on the Fed pausing anytime soon. And this is where June CPI is going to matter so much. Like if we don't get a substantial reduction in the consumer price index in June, I think Jerome Powell is going to have full authority to be like, look, inflation is not under control. Now, remember, CPI is currently underneath the Fed funds rate. So the Fed funds rate is 5.25%. CPI is 4.9%, or at least that's what came in. Trueflation, which is one of the most popular websites to actually report in real time the percent of inflation nationally, is at 3.2%. So, I mean, if the Fed really has data that's lagging, they are fundamentally missing the boat, and raising interest rates again or 2 more times might be like really shooting ourselves in the foot. But if we don't get a substantial decrease in June, we went from 5.1 to 4.9. If we don't go from 4.9 to at least 4.4, like a nice, real reduction, if it goes to like 4.7, 4.8, I think the Fed's going to feel like they have full authority to do what they want. And that means we're going to have some more rate hikes, which is going to suck. Martin, hello. Vincent, hello. James, hello. Good afternoon. Me in the UK. Awesome. Thank you for joining. Bay Ray, what's up? Hi, Amit. I don't think the US will default, and Mo's delay in improving. Yeah, there's no way in hell the USA is defaulting, especially because our debt is the reserve currency for the world, which is why the Democrats are like, hey, our debt really doesn't matter, so why are we worried about spending? And the Republicans are like, one day it might matter, because right now China is trading with Brazil in the yuan instead of Dolores, right? Dollars, and they're trading oil with Saudi Arabia in yuan. So it's like, we might not be the reserve currency forever. And I don't think that's going away anytime soon, but the fear of that is what I think Republicans are hedging back against more. What is the P on your chain? So, I took my Palantir gains the other day, and I decided to buy a gold P for, Palantir. No, I'm just kidding. This is actually real gold. This is my mom. I have a nickname at home, and it starts with a P. My mom doesn't call me Amit. She's never called me Amit a day in her life. She has a nickname that she calls me. It's called Pathik, Pathik, and it's a Hindi name. And so she actually found this gold chain while she was going through some of her stuff, and she's like, "Oh, you should wear it." I haven't worn it in like literally years. I got it when I was like 3 years old or something. I think my grandmother gave it to me. So yeah, so it's just like a gold chain that I started wearing again. Yeah, it looks kind of cool. But it also could also mean Palantir. So that's what we got. All right, we got 30 seconds until the market opens, and we're gonna see where we're at, where things going for Patel. Yeah, if Chris gets this fucking Truist play right, I'm gonna get a K and a P tattooed on my fucking chest if Chris gets this play right, because there's gonna be some big money to be made, I guess, if that happens. But we'll see. We got a long way to go. Good morning from Singapore. Thank you for being here. Singapore is a beautiful nation, very expensive nation, but I appreciate you being here all the way from Singapore. All right, here we go, ladies and gentlemen. It is 9:30 a.m., February 22nd, 2023. The stock market in the United States of America is currently open. Wake your ass up. It is time to get back into the markets. Look at Tesla doing so phenomenally well, up 181, up 0.46% right now. Shopify is up, ARK is up. Alibaba 85.82. Their earnings were but 1.4% up, not too bad at all. TFC 29.92, Apple at 174. Nvidia has earnings on Wednesday, and I've seen a lot of commentary over the past couple of days on Twitter about Nvidia's metrics, the type of results they would have to keep up for the next couple years to justify and just grow into the valuation they have right now is kind of insane. So I do expect there'll be a sell-off, but if it keeps going ridiculous, then maybe it keeps going ridiculous. I mean, who thought at 230 when people on this channel were saying they were starting to buy puts? And I was like, look, I can't blame you if you're buying some puts on Nvidia, that it would be at 309, right? For anyone shorting it, I mean, that was probably a mistake, but it's up. It's up nicely. Super microconductors or super microcomputers up at 162. Palantir 1148, so down 2% to start the morning. Again, we're holding 1140, which is the biggest thing in my opinion, or just holding 11s because even staying in the 11s is so unbelievably difficult. So the fact that we're there is a very, very good thing for Palantir. And let's see if we can just continue to hold. Truist passes $30. Well, it was at $30. Now it's at $29.98. Weight Watchers 758. Microsoft, look at that bad boy, 318. Just continuing to run with Nvidia. Google, same, 124. Big tech is finding a home in this stock market, and it's continuing to rise as the market becomes more, I guess, conducive to some of these valuations versus what it was in the past. I mean, some of the valuations are getting up there. Let's just say that some of the valuations for some of these stocks are getting up there. Nasdaq at 12,661. Intel at 30. SLG 22. Enphase 163. What else do we have? Netflix at 365. That's a reduction from last week. Let's go to the QQQ. The QQQ is up about 24% this year. At 336. Is this the correct one? Yeah, 336. Huh. Let's see where it's at for the year. Look at that. 253. October 2022. 338 right now. So if we do some quick maths, it is currently up 33%. Not bad. 33. I mean, this is one of the major indexes of the tech line. Big tech has had a phenomenal year, and earnings have been really well. So I could see why that makes sense. But what do we got? Thank you for 300 people in the live stream. We got 300. Thank you so much. I appreciate that. At 12 minutes, 300. I think this is like the 8th or 6th or 7th day we're at 300 in a row. So thank you all so much. Would you like Palantir to go up and SoFi to go down? Looking to start a small position in it, ideally below 480. Yeah, and I think SoFi can go back into the 480 range. SoFi is not respected right now by any of the major institutionals. I mean, the price rating we got on it last week at 250 was just absurd. SoFi is not respected. That is a good thing because that creates an opportunity. I was talking with Sachin. I did a video over the weekend. I think the last video I did where he was explaining that it's really nice that the market doesn't understand AI, because if they don't understand AI, they're not going to understand Palantir. If you don't understand what the moat of AI is, how could you understand what the moat of the AIP platform is for Palantir? And so his argument was that there's really not, the market hasn't consolidated on what are AI stocks outside of Microsoft and Google, right? Because they're just the biggest companies in the world. But they're not giving you the 10 bagger, right? The 10 bagger is coming from, okay, this is going to be the crypto play. This is going to be the AI play of the decade, of the century, etc. And Microsoft and Google, they might be a great AI play, but they're just so big that for them to 10x, for Microsoft to become a $10 trillion company, it's just, over the next 10 years, it's going to be difficult. It's going to be pretty difficult. Whereas for Palantir to become a $200 billion company from $20 billion, it's not as insane, even though it's going to be hard. It's just a little bit easier than becoming a 10 trillion. I mean, what are the earnings you have to put up to justify a $10 trillion valuation, right? So if we're looking for that 10x, that generational opportunity, and that exists in a company that really the market doesn't understand, that obviously gives more opportunity for people to do different things and load up. Who is TFC's biggest competitor or comparable company? It's not really about competition with them. I mean, they're a regional bank, right? They're the 6th largest bank in the United States of America, $420 billion in deposits. They, I think, are the best out of all banks if you're thinking of an investment for regional banks, simply because their commercial real estate is the lowest out of all the banks. Their depositors, 55% of them are small businesses, so the risk of a bank run is just incredibly small because it's not just regular people. And the average relationship they have with one of their clients is 10 to 15 years. So it's at COVID levels. Nothing has changed. The fair value of all reports that I've seen from Morningstar, et cetera, is $57. Their interest business is, their insurance business is doing phenomenally well. And there's essentially zero reason that it was meant to crash in terms of the specificity of the bank itself, outside of the entire sector coming down because Silicon Valley Bank fell and FRC. If you look at the podcast from Josh Brown, who's someone I respect, The Compound and Friends, it's a great financial podcast. They were talking about it at the 51-minute mark. They were like, we're buying the banks. They're like, there's no reason why the banks deserve to be down and punished as much as they are. So I think that's kind of I think that would be my thing. I mean, there's not really about competitors because it's a bank. It's more so about what is the thesis for the valuation. I like the Jacobs CEO telling Cramer that he really likes Palantir, doing some great things. I will be reacting to this video. The Jacobs and Palantir. Jacobs is an engineering company. Palantir, we all know what Palantir is. They did a partnership like 9 months ago for water infrastructure. And obviously Cramer's been bearish Palantir. The CEO of Jacobs went on his show and told him to shut the hell up, basically, in a very intellectual way. And now Cramer's bullish on Palantir. So that's not the best for us unless you want to accumulate some more shares, because maybe Palantir will start to go down and then we'll start to buy some more because Cramer said it. But the point is, it's great that someone who used the product went on Cramer's show, and when Cramer didn't call them a real company, they were like, no, this is actually legit and you got to look into it. So I'll be looking into that a little bit more and reacting to that exact clip. Okay. What are your thoughts on PayPal? And then we'll get into some of what the mainstream media is saying about what we're doing with the Federal Reserve. My thoughts on PayPal are as follows. I think the valuation is phenomenal right now. I think it is potentially a meta position at $88, sitting at $60. What's the price right now of PayPal? The price right now of PayPal stock, let me know in the chat if you own any PayPal. It's $60.90. Okay. I think PayPal is a really interesting opportunity. The problem is Meta at 80, people are comparing it to Meta at $88, right? Like the market doesn't understand, blah, blah. We think Meta is the next AOL. So it's like going out of business, and then Meta just like rebounds. The reason Meta was never going to go out of business, and I knew this, and I still didn't buy the stock, which I will hate myself for till the day I die, that I did not buy Meta 80. Like I legitimately, this was the most inexcusable mistake I could have ever made, is that there is no competitor to Meta. TikTok is not a competitor. Google is not a competitor, right? And when I mean competitor, I mean, what platform has 3 billion people using 3 of their apps, Facebook, Instagram, and WhatsApp every day, and that religiously use it? Even if you don't use it anymore, there are billions of people that use it. There's no other competitor on the planet. And all of them use Facebook's infrastructure to be able to build their apps. So like the downstream effects of the advertising business is just phenomenal. So like there was no reason to assume Facebook was on the trajectory of AOL. PayPal, I don't think it's on the trajectory of like a failed company, but the moat isn't as clear outside of the fact that they have users. But Venmo exists. Well, I know PayPal owns Venmos, but what I mean is Cash App exists, Square, Zelle, Nubank has their own stuff from the international perspective. There's just so many different ways to send and receive money that, I mean, Apple Pay, like you don't really need to go through PayPal. So as a result of that, PayPal has a moat. I do believe it will go up from here, but I don't think the moat is so substantial that it's like a generational, you've got to buy Meta as much as possible, because Meta does not, like the market's just stupid right now. I don't think that PayPal's in that situation right now. So Andrew says, I started a position in PayPal last week at $60.88. I think it's a great buy here, undervalued across every market. Yeah, and I agree. Now, is it a 3-4x from here? I don't know. That's the question. That is the question. Microsoft has 7x in 8 years. That's crazy to me. Yeah, I mean, look, I guess Microsoft was one of those buys where it's like phenomenal leadership. You know, when Satya Nadella took over, that's when we really started seeing Microsoft doing phenomenal. But we'll see where it goes from there. All right, our boy Jeremy Siegel, he's back on CNBC. Let's now again today. The Fed, so or James Bullard, executive chair of the Fed, said 2 more rate hikes probably coming. Let's hear what Jeremy Siegel has to say about that.
Minneapolis Fed President Neil Kashkari joined us, had this to say about a potential pause in rate hikes on the way.
I think right now it's a close call either way versus raising another time in June or skipping. Some of my colleagues have talked about skipping. Important to me is not signaling that we're done. Mm-hmm. If we were to skip in June, that does not mean we're done with our tightening cycle. It means to me we're getting more information. Do we then start raising again in July, potentially? And so that's the most important thing to me, is that we're not taking it off the table.
Our next guest has been a critic of the Fed's rate hiking path. Joining us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. And Professor Siegel, what Kashkari had to say there essentially is data dependence. We're at a point where the target rate is not too far from where they anticipated it needed to go. On the other hand, inflation not down to their goal. Does that make sense to you here?
Yeah, I think it is very data dependent. Let me tell you the data that I think it's dependent on. I think it's dependent on that payroll data that we're going to get a week from Friday. If that is really hot, and if the unemployment rate ticks down to a new like 70-year low of 3.3%, boy, the Hawks will be very active at the June meeting. However, if there's a slowdown as expected, if payroll growth is under 100,000, if the unemployment rate goes up to 3.5 or even 3.6, I think that absolutely means a pause. So I'm looking at that payroll number as probably the deciding.
Right now, unemployment, I think, is 3.3. So he's saying if we get to 3.5, 3.6, we get to a pause. Now, the Fed, a couple months ago, they said they wanted to get unemployment to 4.5, which would be like, I think, 1.7 million jobs gone. I don't know if we're getting to 4.5. I mean, that, like, the economy is just way too healthy to have almost 2 million jobs go away. So if we get to 3.5, 3.6, that might be enough for them to be like, all right, it's time to pause. But I mean, it'll depend on what they think at the moment.
Number. I do know that they get that CPI on the first day of their 2-day meeting for the month of May, and certainly that will factor in. But I think employment is the key to Fed decisions now.
It's fascinating in the sense, Professor Siegel, that we have had no response in terms of slowdown in employment, really, in the observable metrics after 500 basis points of Fed hikes over, a little more than a year. So I do wonder if that still seems to be the swing factor that it has always been historically.
Well, I say no slowdown is a little bit of an overstatement. If you take a look at the increase in non-farm payroll, you do see a downward trend. Mm-hmm. It isn't as downward as we thought. Actually, not as downward as I thought. I thought we would be getting near zero and maybe a negative print. That may have to wait until fall. But definitely there has been a slowing. And in fact, even Jay Powell has acknowledged that there has been a slowing of that rate. It's just been a bit slower than we thought. And I think that's what's encouraged the market. Hey, I don't see a recession there. Earnings are holding up at this point. And by the way, I don't think there's going to be, not only do I not think, I'm virtually certain there's no default, and no one wants to be caught short on the market on a day the deal is made. So I think we got a lot of shorts are covering for that potential outcome in the next couple of weeks.
Jeremy, you've been right about inflation coming down, and it has come down nicely with what you've talked about for a long time, which is the decline in some of the monetary aggregates. But what we're hearing from the Fed is two things. One is the progress has slowed, and you can kind of see that if you look at the inflation numbers. And the other thing is that it hasn't come down enough, at least even with a negative year-over-year change in the money supply, you haven't gotten back to the 2% target. Is your advice to the Fed, just let it run and it's going to come back? Or do you think maybe they might have to do more here in order to bring down inflation to their target?
No, they shouldn't do more. If you take a look at sensitive commodity prices, they're still in a downtrend. I keep current CPI and core using the Willow, the apartment list rental, the Case-Shiller, and by the way, I get core now at year over year too. And in fact, even Kashkari and Powell acknowledged that in the second half of this year, as the lagged BLS housing data shows the decline, they're going to get near their target. I think by continuing to raise, they're adding way undue risk. Sentiment isn't good.
All right. So, I mean, we got Siegel's thoughts. He does not think that the Fed needs to keep doing anything more and just kind of has to let it play out. We will see kind of where it goes from there. I tend to agree with him. Look, I think CPI is going to determine a lot, but inflation's going down, man. This sucker is going down. It's not sticky as people say. Yes, shelter plays a little role into it. We need to get oil to $60 to get the Fed to really feel excited that energy prices are starting to go down. But I don't think we're at a place where we, like in June 2022 when inflation was at 9.1%. Like, I get the point. We got to do something. I don't necessarily think that is a situation we're at right now. And if that's the case, that might be a little bit too rough. Let's go to Trueflation right now. Trueflation is at 3.04. I mean, at what point is this bad boy going to be under 3? And again, Trueflation takes into account everything that's going on right now. So it's like real. It's one of those things that's not some BS website, right? It's a lot of people use this to be able to understand the different methodologies. If we go back to June, the Fed said it was 9.1%. We had inflation at 11.85%. So Trueflation was like, actually, no, it's worse, right? There's no bias here. It's literally just explaining if it's, what real-time data suggests to be able to determine where inflation's at. And now we're down to 3.04. And so I would trust something that's looking at real data versus data that's lagging. And if let's say inflation's actually at 3, but the Fed thinks it's at 4.9 because the Fed's using whatever fucking antiquated methodology they're using, those rate hikes make no sense at that point. In fact, they're doing a major disservice. And you know why we can say this about the Fed? Because they said inflation was transitory. And it's like, when the Fed says inflation is transitory and inflation is not fucking transitory, and there's countless other times in the past where the Fed has just simply not got it right, then you have a little bit of doubt for how the Federal Reserve thinks about this. 184 Tesla. Congrats to all the Tesla bulls. We got 184 Dolores on Tesla. Was stuck at 162 for so long. So Tesla's doing well. Glitch Life is a OG member of this chat. I want to give a shout out to them. They made a crap ton of money shorting the market, I believe, like 2 months ago. I think they texted me one day that like a 50K short turned into like 400K. It was like insane. And then they retired. And then they just went on their own merry life. So I asked what their portfolio consists of, and Glitch Life has 150,000 shares of DNA and 8.5 thousand shares of Palantir. Now, Glitch Life is actually the person that got me interested in DNA. I currently do not own any of DNA, but it's interesting because where's the stock price right now of DNA? DNA is a synthetic bio startup, not startup. It's an established company. They help startups in the synthetic bio space. It's at $1.32, still at a $2.6 billion market cap. I think it's a little pricey right now in terms of valuation, even at $1.32, because I need to see more earnings growth. Their last earnings was pretty good. It was not good enough to get the market to really buy the stock, but it was good. I think there's a long time before this guy gets back to normal, but when it does run, I think it will be one of the winners in ARK. I mean, ARKG, the genomics fund, I think genomics is DNA sequencing. It's a very interesting space. There's a lot of stuff going on, and it's real shit. I mean, I spent a good 3-4 months studying DNA, and I started to understand the potential of what synthetic biology could become. It's greater than the overall market for computer science and digital products, because synthetic biology creates real products, and 8 billion people use real products, whereas like 5 billion use digital products and real products that we actually need, like plates and cups and all that type of stuff. So it's an interesting company, but I'm not currently buying it right now. We will see how it goes, but Glitch Life is obviously very excited about that one. I have a tiny bit of Nubank as well. Awesome. Thank you for the $5 super chat. Tesla, Palantir, good morning, Amit. Good morning to you as well. Tesla's up, Palantir is up. Where's Palantir right now? It's green a little bit. Oh, 1178. Just went a little green. The fact, again, I think it's really important to understand the fact that it's holding 11 is amazing to me. We had earnings on May 13th. It's May 22nd. It's been, how many days? 12, almost, it's been 2 weeks, essentially 2 weeks. 2 weeks, and we've held up. That doesn't happen. We've never had that. It's always crashed below. And so the fact that it's establishing a base means that the next time it crashes, maybe it's only to like the $9 to $10 versus the 7, 8, 6. And at 9 to 10, I think a lot of people are going to load the hell up because, they missed out on the opportunity. And then, it's going to establish a floor. So it's really nice that it's settling down right here. Samuel says, Amit, could you share your process for tracking stocks, managing your watch list, etc.? I want to learn more on how to do this for the long term or a video to do so. It's a great idea for a video. How to answer this, Sam? One of the first things I did, one of the recent things I did is I bought a Wall Street Journal and a Bloomberg subscription. I mean, honestly, one of the easiest ways to keep up with what's going on in the market, not just stocks, because the market obviously influences those stocks, is to read. I mean, honestly, it's to read. And the Wall Street Journal subscription right now, if you're a first-time subscriber, it's $4 a month. $4 a month. I mean, $4 a month for what is that? That's $52 a year. For $50 to be able to have access to some of the most high-quality content in the business world. I mean, I was reading the Wall Street Journal this morning. I was like, why didn't I do this before? And so to me, I think it's just like understanding more about the market. Like this Facebook fine, right? If I didn't know about this, how does that implicate how I think about Meta stock, right? I mean, these are things that you kind of have to bake into yourself and then read a little bit more. So that would be the first thing I do, is just get a little bit more information and up my skill game on knowledge. But that's a great idea for video. I can definitely do that. Oh, and Upstart back to $400 tomorrow. Let's take a look at Upstart. Thanks for the $2 super chat. For those that don't know, Owen's is some 19-year-old kid who's obsessed with Upstart, and I don't know why. I mean, look, obviously they've had a nice little run up. So they were at $11. Now they're at 24. Owen has been talking about Upstart since they were at 400 and it collapsed to 11. And he said, look, it's going to be okay. Now they're from 11 to 24. So he feels very happy about Upstart. Upstart is an AI lending based business, and they essentially use artificial intelligence to be able to write loans. Their whole competitive moat is that because of their algorithms, they can write those loans in a much more efficient, effective, and basically cost resilient way against what the traditional loan business and the barriers that exist in the traditional loan business. I think they might even be correct about that. I just don't know why it's a unique company, why there's some phenomenal potential here. It was at $400 in the bull market and it crashed all the way to like $11, even maybe below that, I think, at one point, because it's like, it's not that special. And like, there was no point for it to be at $400, but nonetheless, it's up. And if you bought Upstart at the low, just like if you bought Open Door at $1, you were up, right? Open Door was 98 cents in December. And honestly, I should have taken a stronger look at that, because Open Door I think it's a really not strong business, in my opinion, just from how they're approaching the buying and selling market. But at 98 cents, it's like there might have been some upside there, some alpha, and I didn't look into that. Nonetheless, Upstart is up, so congrats to those who are Upstart shareholders. I never want to poo-poo anyone making money. So, Owen, I hope you made some decent money. I hope you loaded up at 11, because you're up more than 100%, which is not bad. Alibaba 87, SMCI 165, Tesla 184, Palantir 1180, PayPal 61, QQQ 338. The question here is, we're having a decent amount of green. Are we in for like a summer of just insane amounts of pain and anguish and red and S&P to 38, 3,900. There was a new report that came out, I think, from Bank of America that said they see the lowest the S&P, or sorry, JP Morgan Chase, the lowest the S&P goes is the 3,900, and the bull case for the S&P is 4,600 this year. Remember, it was at 478 in the beginning of 2022. So we have a long ways to go before we meet the 478 level. 400 people. Thank you. At 32 minutes and 5 seconds, we hit 400 on the morning stream. Thank you so much for being here. 400 people means the absolute world to me. You're spending your morning with me. Thank you all for being here. 400 is amazing. Thank you all. James Lacey, what is your average price on Palantir Mint? $15.30. And I know that's really annoying but granted, it went down from 26, right? So I've been doing it decent. The thing about me with DCAing on Palantir, I DCA'd after the Q4 2021 earnings collapse when it went to like $11-12 last year. That's when I was loading up a lot of money, like a lot of money. And they're all publicly documented on my YouTube channel, like thousands and thousands and thousands of dollars almost every other week. I was just buying a lot I even sold my Meta at that time to buy it. And then it collapsed to 7 and 8. And like I bought at 7 and 8. I just didn't buy as much as I probably could have if I didn't buy at 11, 12, and that's just how it goes. Ultimately, if I think it's $100 stock, it's not the biggest deal in the world, but that's why the average is a little bit high kind of right now on that one. Meta, look at that. Meta hits a 52-week high at 248. So that 1.3 billion fine did nothing to Meta. They just kept it going, and it's there. Bought at 33 and never bought again. Yeah, see, you gotta DCA a little bit at some level, right? It's okay if you buy high, but the DCA is what makes it okay. TJ, the Wheel Deal, thank you for being here. Mid is my go-to source for market news, SoFi and Palantir. Thank you for all you do. Thank you for what you do, man. I appreciate you, TJ, the Wheel Deal. Is your lot can be defined as bulk buying? Yeah, that's also true. That is also true. There was a lot of bulk buying going on, which ended up making it hard to DCA as much as I wanted to. Okay, let's see what else the talking heads are talking about when we are assuming it's going to be. Okay, let's get some updates on this deal. Again, the Democrats, they've got to get to a deal soon, or else there's going to be catastrophe like we've never seen before in the United States of America and the global economy, since the United States controls the infrastructure for so many other economies. So let's see if these reds and blues can just get a deal done and not destroy the world.
Former U.S. Congresswoman Donna Edwards and Mick Mulvaney, former White House Chief of Staff and Actum Strategic Advisors co-chair. I'm going to start with you, Mick, because when you were you had this job, right? Mick
Mulvaney was the former economic advisor to Trump as well.
to be in control of the budget. How would you feel right now if the other party was pulling this on you?
Oh, they did. I mean, that's how Washington works, right? Keep it in mind, back in 2017, 2019, when we were trying to get a relatively simple debt ceiling extension through, the Democrats held us up, negotiated for more spending. They always get negotiated. So if you ask me how I feel like I always feel, which is it's Washington, pretty much business as usual. I think they'll make some progress this week, though, Steve. I talked to Kevin last night. It was an event with him. He was concerned about exactly what you just mentioned, the president being worried. He was worried about the president's left flank. Kevin has been able to get his whole party to come together to pass the bill to raise the debt ceiling, but he was concerned about the Democrats' progressive left, said that things move backwards.
By the way, Biden is at the G7 summit right now, so he's in Asia. So he's going to be coming earlier. He's cutting his trip short, but he's not even around to do some of these negotiations.
Over the weekend, when the president left the country, that they were talking about small spending reduction changes. They seemed to be making progress on Thursday and Friday. Then the president left, and he said they showed back up over the weekend, and the Democrats wanted more spending again. So I think that's why you hear him say things have not moved in the right direction. But they'll meet today, and we'll see if he can make progress one-on-one.
Donna Edwards, could you handicap what you think is going to happen here? Is there going to be a default?
Well, I mean, I've said all along that I think, like Mick, we know how Washington works and that they're going to come to some sort of deal. I think all of us ought to be crossing our fingers for that. But I do want to take issue with the fact that we know that Republicans passed a bill in the House that they knew was not going to go anywhere in these negotiations. And so to say that they passed their bill and they, put their ideas forward, knowing that it wasn't going to go anywhere, means that they've got to sit down. Republicans have to give, Democrats have to give, and just avoid default. We're in that window right now, though, where whether there's a default or not, it could have still tremendous impacts on the economy. So they basically have this week to get this done.
And look, they're going to get it done. It's not like there's not going to get a deal that's going to get done. It's the political theater that has to happen in order for the deal, or in order for both sides to feel they got the best out of each other. Right. And this is what, I took a class on negotiations in college, and in that class, it was very interesting because negotiations was, there's this thing called, I think it's called a BAFTA, your best alternative. Forgetting what the acronym stands for, but it's the idea of what is the best alternative that each side has that still makes them feel good about the entire deal, right? And so no one wants to walk away feeling great. No one wants to walk away feeling like they got suckered out of it. Both sides have to feel on the deal in order for the deal to go through. And the problem is the Democrats want to spend more. The Republicans want to spend less. Democrats are like, we're the reserve currency of the world. We can keep spending. We have the money printed. The Republicans are like, but inflation, but this, but that, the China, Russia, blah, blah. And so both sides have to find some way to have a conducive, ultimately, settlement. The thing is, it's political theater to me because the debt ceiling is going to be increased no matter what, because everyone has money in the stock market. No one wants the economy to fail. And like the Republicans don't want that shit to happen either. They have constituents. So nothing's necessarily going to happen. But the question ultimately becomes where they give different sacrifices on each side to be able to do it. BATNA. What does it stand for again? BATNA negotiation. It means best alternative to a negotiated agreement. Okay, there it is. BATNA. I remember that, bro. We were taking that class before during the pandemic. So it was in person for like 2 months, and then boom, the pandemic happened. And we were in Zoom classes during the negotiations time. But it was a pretty helpful class, in my opinion, because we were in like real life situations where you actually have to negotiate and figure things out. Amit, have you ever read Never Split the Difference? Just got my dad reading. I have not. Seems like a dope book. I'll check it out. BAFTA or movie awards. Yeah, by the way, Wolf of Wall Street, I said this on Twitter. I think top 5 movie of all time. Okay. Now maybe it's a boring take. Maybe it's not as fun of a take. I think Wolf of Wall Street, top 5 movie of all time. It is what it is. And if you disagree with me, I think you're wrong. I think Wolf of Wall Street is top 5 movie of all time. That's how I feel. That is how I feel. And that's what's going on. That's just how I feel. And, I don't know what to tell you, but that is how I feel. Now, let's go into one more thing. All right, I want to play one more video as we're talking about Palantir from one of the analysts I actually like a lot, Dan Ives. Let's hear a little bit on his take on where the AI race is going. By the way, I have a video coming out either tomorrow or Wednesday about C3 AI. Actually, let me show you. Let me show you this, guys. Can I show you this? This is actually gonna be a little bit better. And we'll end it on this, and then we'll talk about the AI stuff later. So someone apparently, the C3 AI dudes, right? C3 AI, we all know who they are. Their ticker symbol's AI. They came out with a take, okay? And the take was the take was that Palantir is just the data house. It's just the data lake. That's all they are. And it was, someone tagged me on Twitter on this, and then they clipped the moment. And it was really interesting to kind of see how they think about them. They were essentially saying, look, we're the ones who actually data-driven analysis and decision-making, blah, 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 blah. And they're, at the end of the day, just a lake house. I want to show that real quick because I want to do a deep dive into C3 AI to get a better understanding of this company. I haven't fully researched it as much as I have wanted to, but I'm trying to understand what's their competitive moat, right? Because they have a lot of balls to be saying the stuff they're saying. And when a company has those balls and they're saying that stuff, you would imagine, like, you know, they actually can live up to it. But I don't know if they're living up to that per se. So let me play this right here. This is what someone tagged me in on Twitter. Michael, thank you for being here. Good morning to you as well. All right, so this is where they tagged. This is what they're saying.
This was the largest market to date in software. However, IDC revised this number this year to $791 billion. The growth in this market alone in the last year is larger than the entire analytics platform market, right? So still one of the largest markets today. However, as Rowan mentioned, and I think even Jim talked about, the approach that many companies are taking are to put in place these data lakes and try to then build kind of departmental AI applications against those.
Now, notice on the data lakes, right? You got Databricks, Snowflake, BigQuery, Amazon, Redshift, and then Palantir. And he's just going to talk with the utmost confidence as he keeps going.
Data lakes. The issue is it's not reusable, it's not scalable, and at the end of the day, you have an AI application, but is it showing value? So the way that C3 thinks about its product roadmap, how we build product, how we...
And so this is hilarious, right? This is absolutely fucking hilarious. And we've got some good, some Twitter DD under here. So, you know, Andrej putting out AI is the biggest scam in the market, started as a carbon measuring tool, then energy, then IoT, now AI. So C3 was founded in 2009. Originally, the C in the company's name was a reference to carbon, and the 3 was a reference to measure, mitigate, and monetize, because the company's original goal was to help manage corporate carbon footprints. For some time in 2016, the company was named C3 IoT. And before that, the company was briefly named C3 Energy. And now the company is named C3 AI. It's actually hilarious because I've seen all the crypto folks just switch into AI over the past couple of years, because that's what's hot right now. That's what's, trending. And I didn't even know this. And so if this is correct, what Andrej is saying, that's actually hilarious that they pivoted. And look, pivoting is not bad. It's just, if you're just pivoting based on hype, it's very interesting. He also showed their operating margin is at negative 102%, and it's trending further down. The only thing attractive about this company maybe is the market cap. And even then, I haven't done all the numbers on, I think they're putting up like maybe $300 million in revenue per year. I know they put up like $77 million a quarter. So you just do that times 4, you get to something around 300. Market cap's at $2 billion. So even that, it's a little expensive. But compared to the other SaaS companies, its market cap is much lower. Nonetheless, if I do a deep dive in the numbers, I don't think it's going to be as attractive as people think it is. And this is a stock that was up 37% last week. So it's getting caught in with all the AI buzz. They have the balls and the unmitigated gall to be like, Palantir is just a data lake. And it's just like, I don't know if that's the case. I don't know if that's true. I do not know if that is true. Good, you are bringing these bogus statements to light. Yeah, I'm going to do a video on them. And I haven't deep dived on C3 AI, as much as I wanted to. I've known about them for a year, but I haven't looked at the financials, actually understood the business, really did a deep dive on the clients they have. So I want to do that for a couple of days before I make a full video on it and then go through in there. C3 deal with Baker Hughes and shambles. Yeah, see, this is the stuff I don't even know about. So I got to go a little bit more deeper and understand them a lot more. Just like cannabis companies going blockchain in 27. Yeah, it's all the same. The thing about AI is that it's real. Like all of us, I think, are smart enough if you use ChatGPT to be like, oh, this is real. This crypto bullshit, this is whatever, right? The cannabis stuff, it's like, yeah, but it appeals to people who smoke weed. AI is just everywhere, everything, all at once. And that opportunity is a generational lifetime that I think Palantir is going to be able to capitalize on. But you're going to get a lot of smoke and mirrors, right? With companies saying that they are the real deal. And it's like, can you actually do this? And it's like, I think it's a really hard bet to just, the fact that they named their ticker symbol AI to me already feels like a scam. It's like you're already doing this indirect form of marketing just to be able to establish yourselves without actually putting up the results. No deep dive needed. They are a shallow puddle of mud. It's just and they have the guts to be like, Palantir is not doing shit. It's very interesting because one thing you can't deny about Palantir, you can say whatever you want. The tech is pristine, right? The product, you can say sales, but the product is the product. And the results we've seen from the product. June 1st, FoundryCon, we're going to get some updates on how it's going for other clients. And so, it's just going to be more updates on how the product is implemented. It's hard to deny that the product is not as strong as it really is. But when C3 AI is like, they're just a data lake house, it's like, you see someone like Alex Karp talking for months about the problem with data lake houses and just like how they don't do anything and why we built a product that's different. And then you got C3 AI saying, oh, Palantir is just the same as those guys. It's just like, all right, well, I don't know. AI has been real for years. Palantir is just, people are just waking up to it. Yeah, I would agree. I would agree as well. All right, everybody. That is it for me. Thank you, 400 people, for being here. I think this is like the fourth day in a row we've had 400 on the live stream. So thank you so much for being here every day in the market open. Got a couple videos coming out a little bit later today on Palantir. One is going to be talking about Peter Thiel's hidden reason. Not hidden reason, but like obvious reason that is hidden to most Palantir investors for why he started Palantir. So we're going to be going through that. Talking a little bit more about some of the ARC ideas for why they like Palantir, especially Brett Winton. He went on CNBC and he discussed a little bit more on his ideas around AI and big tech. So we'll be doing that. And then we'll go from there. Finance Junkies, last night's episode was pretty nice. So if you want to check it out, timestamps are there in the podcast. And then the official episode will be, or new episode will be up 10 p.m. tonight. Back at it for the entire work week for Palantir. That's it for me. Thank you all for joining. Twitter is in the description. Please, please, please follow on Twitter. If you don't have a Twitter account, make a Twitter account and check it out. It's a fun community for Palantir, so you can check it out on Twitter. That's it for me. Have a great day, everybody. Monday morning. Let's get to it. Thank you so much. I will see you later tonight on Finance Junkies. Good night, everybody.